Good evening, all. Ira Epstein of Linn & Associates with your metal market wrap-up for this Tuesday, and we are sitting here now on April. I almost went April. Do it again. Good evening, all. Ira Epstein of Linn & Associates with your metal market wrap-up for this October 5th, 2021. The time getting on to 5:30 p.m. Central Time. A choppy market. I know you're going to say, Ira, what are you talking? The market came back. When you look at where the stock indices were just recently on the break, where they've come back to, you're getting all this noise back and forth. You're really not going anywhere. You try to nosedive. You don't really hold the big breaks. You come back up, but you don't break out back to the upside. You got to be careful of that. Gold did the same. Gold was acting real good, then it gave up ground quickly. You've got to keep your eye on that. Silver market, the same. Until silver clears the 2290 level, it's got problems. In the copper market, you don't want to break much, but you don't rally too much, and that's because the contagion there is definitively spreading. Now, the question is, how do you keep it spreading there for the copper market? And that's really going to be the problem. While foreign investors will most likely get wiped out from bonds that they bought abroad from these property developers for homes, specifically in condos, whatever they have there. That's where I think it's going to happen. As for China looking internally and saying we're going to protect the people that put down deposits and the like, yes. Then when you get to the energy market, China has turned on the spigot. They have instructed their banks to again begin aggressive lending to all quote-unquote coal mines that are approved, and then other energy sources. They don't want to be caught there flat-footed as the winter comes on and they find that their prices are, number one, exorbitant. Number two, they can't get the oil on time and they get revolting from the people. That would be a terrible situation, whatever the word that you can revolt in China means. Bonds and notes, still, if you will, interest rates creeping higher. We're around 1.536 in the 10-year note. So in the gold market, as you can see, you consistently are staying under that 18-week moving average of closes. Now, what I did tonight is I began writing my nightly newsletter. And, you don't all get the things that I do because you're not paid subscribers. And I started talking about stagflation, definitions, what it was last time we had it. Do you remember the president we had when we had stagflation? Do you remember what stagflation is? Do you not remember the markets that act the best in stagflation? And what is it? Maybe we don't get it. Either way, that's one of the things that we'll be looking at tonight. That's what I wrote about. So as I look at this market, you can see it's just hanging in there to the downside. You still have that overall pattern like a stepping ladder of coming down, and then you paused here. Notice that each of these other breaks didn't come back up to the step. And on this one, you actually, you're coming back into it. So that's the question mark. The pattern on the chart, according to the swing line, is bullish. You have a higher low and a higher high. Bullish. Where's the market in relation to moving averages? Because what you want to do is put filters on charts. And when you do that, you're fighting at the big battleground, the 18-day moving average of closes. When prices are under that, the bias is down. That's my definition. Over it, the bias is up. So you have the trend up, the bias down. They're fighting each other. You don't have much of anything. The market is now flattening out the Bollinger Bands, which are an algorithm designed to keep the market trading within them 95% of the time. So when that occurs, this becomes the support zone. When you go up to it, the resistance zone. And you've seen it do this before. Can you step out of the band? You absolutely can. That's why the word's 95%, but you only stay out of it 5% of the time. That algorithm will get together with price and bring things around for you. Momentum is up. So you got what I'll call the first buy signal yesterday, or did you? Well, did you close over? And this is yesterday. This is Monday. Remember, we're already a Wednesday trade. That was the first buy signal, and it immediately was countered by a pretty good break. So if you bought the market on the close at 1767.60, you were sitting there out nearly $2,000 a contract. It had fallen on you to 1748.60. each time you've done that recently, you have not been paid back. The market has hurt you. That doesn't mean it has to repeat itself. You do have the trend up, but you need to get over that number. If you can get over that number and hold it because you're not overbought, you can get more momentum and possibly be looking at the 1800 level. I had someone write me on YouTube and they said, you've joined the party, because I said the market is flirting with getting bullish. I didn't say I was yet in the bull camp. I am yet as of this day. So I guess I am. I haven't gone to the dance, but I am certainly flirting because today you closed back under that 18-day average. So I invited you to the dance, but I decided not to pick you up. Now, I might show up with my limo if the market can get going here and start getting over that 18-day average. But enough of that. I want to remind you of one thing. If you move your cursor, let's pretend this is you moving that cursor, and you go up on this video, as long as you're on YouTube, what can you do? You will see the icon show up, and that's where the invite is for our chat room, which is tomorrow, Wednesday. I'll open it at 12:15 p.m. Central Time. You have to join first with the invite. If you have questions on spiders, stocks, or ETFs, you have to send them to me now. Why? I can cover the 40 futures markets like that. They're all in my charting software. But there's thousands upon thousands of spiders, ETFs, and stocks, and I don't have all of them in my chart. I can call up the symbol, but I want to get the chart action done. A number of you have written me, and I've already created the charts that you did. Some of you have said, Ira, I watched this on my phone, and I can't get there. It's so simple. Go to www.iraepstein.com. Go to the bottom right, do it on a regular computer or a pad that you have, sign up for one of our free offers, and we'll make sure you're on our mailing list. Barring that, you're not getting invited. It's that simple. I can't help how the technology works, if you will, on your mobile phone. I think you understand that. The gold-silver ratio. Okay, you know what I'm going to tell you. You're pulling back to this key number. That's the battleground where the market starts fighting for direction. Is it going to change direction where gold loses to silver? Or is it now breaking down enough where silver starts to gain back on gold in terms of a trend? This was a correction that went from 80, you're back to 77, 77. A lot of sevens there. I like it better than all the sixes, but we'll see what happens. In the silver market, if you can get over 2280 and a half, at least the way that I teach charting, I'd have an all-out buy signal. The stop would have to be pretty far away, 2238. Wow, that'd be 2237 and a half. That's an awful lot of risk. The potential could be 2388 and a half to the upside. That's too big of a risk for me to tell traders that I would advise on trading to take on. Where does copper keep failing? I think you see it. Right here at the 18-day average, again, that line in the sand. You have a market that, with this current action, has a pattern of lower highs and higher lows. You see that? You've stepped out of the trend, but you're going nowhere. And these are pretty broad swings, don't get me wrong. I imagine some day traders are having a ball with it, but it's not a trend trade per se, other than if you're bearish. In the platinum market, you have lower highs, lower lows. The market's fighting to stay over the 18-day average and has been doing this now for 5 days. Just back and forth, momentum flat, difficult one. Trend down, bias up, momentum flat. Palladium market. The market's oversold, trying to get a bounce. And in the process, it's taking these Bollinger Bands and crushing them. They're narrowing in very nicely. Trades are going to show up. October is typically a very highly volatile month. September's normally in the stock market a big down month. Then October starts a lot of volatility before the Santa Claus rallies kick in later after you pass that. That's what I still think is the agenda for the year. Give me some reasons to not think it. What would be the biggest reason? Don't do a debt ceiling deal. Game over. You're going to tank everything. But we always do this, don't we? I mean, it seems to me I'm got years on me trading, 50 years in this. How many times does the government, both political parties, fight until the last minute? I don't recall in my life that Congress gets ahead of everything. They work beautifully together to get things done. I see fights. And certainly the fights began in serious nature, most recently in the Bush-Obama era, and it certainly carried through dramatically into the Trump and now Biden era. I like to name the two last presidents, and that's certainly what's going on. Dollar index, you lost the embedded reading a few days ago. See this right here? That's where you lost it. And I realize the market's come back up. Normally, when that occurs, it means that price and the 18-day average are going to make a run at each other. While the trend remains up, higher lows, higher highs, and you're over the 18-day average, this part, the momentum, is pointing down, and that's a high momentum when you lose an embedded reading and you can't get it back now. It would take another 3 days minimum to reinstate it. No, I think the market's going to surprise people. So I want to remind you, tomorrow we should have a lot of fun. First of all, there's volatility galore. Number two, I haven't done one of your live chat rooms since 2 weeks ago, and that's my schedule, about every 2 weeks. Sometimes I'll skip it. I already know I'm gone the end of the month, and I'll be out of the States. As I look at what's going on through here, I just try to make them fast-paced. There's so much to look at, and you get 20 minutes of my time. Why not take advantage of it? Again, if you're watching me on a computer, click up here. If you're not, get to a computer, watch this video, click up there, fill out the form, and you'll be in. Remember, once you sign up, my email address will be in there. Write me the questions you want me to answer. I only have tomorrow morning to get them all ready, and then we open up at 12:15, and away we go. In the meantime, if you have other questions, my staff can help you. If you got an iPhone, call us. 866-973-2077. If it's not an iPhone, we'll take calls from an Android as well. You have a good day. I'm Ira Epstein.